Finance has always been a leading industry for the initial implementation of advanced technologies. One of the angles blockchain technology might impact is alternative lending. It is why we have designated a panel on DeFi or decentralized finance so we can all better understand the pros and cons with it. The panel has three experts. He is Turan Sert as the moderator and Mohammed Al-Rashidi from One Global and Stani Kulechov from Aave.
Hello and welcome back to Istanbul Fintech Week and our current panel, DeFi, an upcoming revolution. Today we're having two distinguished guests, Mohammed Al-Rashidi, the founder and the chairman of One Global, and Stani Kulechov, CEO of Aave. Mohammed and Stani, thank you for joining our panel.
Thank you.
Thank you.
First, I would like to start, for those from the audience who are not very familiar with you or your businesses, could you briefly talk about your background and your journey to where you are right now, with particular emphasis on the DeFi? Mohammed, why don't we start with you?
Sure. So, thank you, Turan. This is Mohammed Al-Rashidi. I'm a computer engineer. I'm the founder and executive chairman for One Global. One Global is a digital transformation and innovation company started back in 2004 and out from Kuwait. And today they are in 16 countries across the Middle East and Africa. It is a legacy in many domains, and the main domain, which is the context of our talk today, is the Fintech. So we have a digital financial services. We have the license and the BSP, in salary processing, and merchant aggregation, and payment acceptance, and wallet. Then back in 2016, we've been monitoring what's happening since 2008 in blockchain domain and the Bitcoin as an application for it. So we decided to set up an innovation lab. And out from this innovation lab, we have one of the programs inside the innovation lab is the DLT, which is now become the distributed ledger technologies applications. The DeFi is one of them. So we started with the DeFi in applying the same application that we used to do in the CeFi, in the centralized world, into the DeFi using smart contracts. And mainly we are using Ethereum for that. So this is how One Global is coming into that industry. So we used to be in the CeFi, in the Fintech domain. We are in health tech and travel tech and tourism tech and retail tech. And we're also working in the space of the digital transformation and cloud computing. And we have a track in the data and AI. So all that together is helped us, especially the IoT and AI. And AI, they are driving us towards to have a decentralized infrastructure. And that's why the digital transformation came into the picture, how to distribute computing and how to distribute storage and capitalize on whatever happening in that domain from platforms and technologies and underlying technologies, which is so far now blockchain is playing a good role in that. And on top of that, there are the applications that are coming, which is going to be smart contracts. So basically, this is One Global at a glance, and what we are doing in that DeFi domain.
Mm-hmm. Great, thank you. That's really interesting. That's a good overview of your businesses. And Stani, would like to ask you the same question as well. So tell us about your story. And I know that you have the ETH land, and then you moved into Aave. So why don't you walk us through about your journey?
Yeah, sure. Yeah, I've been developing financial applications quite long time. That's been something always that has been interesting to me. And at some point during my studies, I basically found Ethereum and specifically smart contracts, and was quite amazed what you could actually do with this technology. And there was different kinds of properties that were very fascinating to me. Transparency, immutable code, and basically the non-custodial aspect. And I think it was roughly 2016 when I started to build first financial applications on Ethereum, and that was the project called ETHLend, short for Ethereum lending. And Ethereum lending was basically the first lending protocol on chain. And before that, there was one probably decentralized exchange, Ether Delta. So the ecosystem wasn't very much born yet. And we developed ETHLend for a couple of years, and then rebranded to Aave and started to build the Aave protocol. And ETHLend was more of a kind of a peer-to-peer order matching, lending, borrowing marketplace. And Aave is more of a pooled lending model where you have this kind of like a money markets with the reserves, and there's always liquidity available. And it by that it solves quite a lot of interesting things. For example, you can draw the liquidity all the time as there is reserves, and also you're earning even if you are not matched with the borrower. And interesting here is that we started with the peer-to-peer model because the DeFi space and the whole market was quite illiquid in the sense that there wasn't that many users in that particular time, and also like the ecosystem was very small in terms of use cases. And today it's a bit different story, and we see kind of like quite good amount of traction. The protocol itself we launched in January this year, and we have grown quite substantially. I think we're the second biggest lending protocol if you count Maker system as well. So there's been a lot of traction. Most of the traction comes from other developers who are building different kinds of products in Ethereum and using our protocol. And this is the whole idea of composability, where you can create a product by connecting other products. And this is very fascinating in the sense that in traditional finance, you kind of can do the same, but you always need a permission and accept the terms. For example, if you are trying to build an application between two banks, and what is different in decentralized finance is that when you're building these things, everything that is deployed into the main Ethereum blockchain network, that's usable for you. So it's also kind of like a permissionless building, in the sense that anyone, any part of the world could build the next interesting financial application and draw liquidity. And that is for me very fascinating and kind of like keeps me excited in the space.
No, absolutely, you're right. I mean, I think it's good that we're having in this panel two guests from coming actually from both financial backgrounds. But the good thing is, Mohammed, you are actually been in this business for like more than 15 years now, and like more familiar with the traditional landscape, traditional players, and like coming from the CeFi, as you mentioned, like central finance, to the DeFi, to slowly coming up to the DeFi, and like perhaps pivoting or like creating a new innovation lab, sort of like trying to understand the landscape. So it's good that you're coming from that perspective, whereas Stani, you're like more, it's sort of like you were born in the DeFi space with ETHLend and then with Aave. So it's good to actually get your perspective for my questions, like from two different perspectives. So the name of our panel is DeFi, an upcoming revolution, with a question mark at the end. So Mohammed, first I would like to start with you. I mean, as I said, you're like in the fintech area for a long time, and you kind of like disrupt your own model, sort of moving to like trying, experimenting like blockchain, crypto, and AI and whatnot. So I mean, blockchain is one thing, and then DeFi as sort of like generally application of those DeFi to the blockchain to finance space. Do you share the view that DeFi is a revolution? Do you see it as a threat to existing players? So I would like to get your view on that. I mean, I remember one time when I was a management consultant back in New York, my manager used to ask our clients, what keeps you awake at night? So do you think that the existing players right now in the space, the traditional finance space, should they be awake at night with this DeFi sort of like revolution or not?
Of course. So let me tell you what's happening actually. DeFi and CeFi for the watcher and the audience for that video. So in CeFi, we usually go through a certain system and rules. And these are like the digital KYC. I call it digital because we are in digital native. It has to be a KYC where you sign all these papers to know you. Then you have to go to the compliance where you apply all the sanction list, the screening, the AML controls, whatever controls being set by the regulatory, either the Financial Service Authority agency or the central bank. So with that, you are coming into one stage only to be in, to open for you an account. This is just to open an account. Today in the DeFi, you don't need all of that, and you will have a wallet. As simple as that. And the CeFi, you need to have a complete infrastructure in place, core banking and switches and all these components that build the current financial system. In the DeFi, you don't need any of that. So in the CeFi, you are going into companies to come and build for you solid service within that rigid system of the core banking. In the DeFi, you need just to put a code inside a smart contract and run it on the grid of Ethereum, for example. So there are a lot of flexibility. In the CeFi, it's closed. So the decision is only made by certain people, which is the management of that bank or that institution. On top of them, of course, the governor or the society that are attached, like the banking society. And DeFi, the decision is yours. So there is no such a decision centralized means over there. So you can see how close to open. So it's like you are locked inside that room, and I open the room and I tell you, run. As far as you can run until you type. So that's the only way now. It's open space. Open means what? Unstructured. It's not structured. And unstructuring means innovation. Lots and lots of ideas, lots and lots of concepts. It's gonna emit. It's an emission, and it's gonna born a lot of applications that used to be taking very long, cohesive process and coherent procedures in order to come up with a regulation to let it in, to be practiced in a sandbox. Now you just try that smart contract and finish. So the DeFi is solving a lot of problems today. If you go to the capital market, you have this order book structure that is being done, and everyone trying to build that market, and always there are market makers, buy and sell in order to flow the liquidity inside the market. What's happening today is what? Whatever you have as a cryptocurrency, the very known two is Ether and Bitcoin. And Ether, you just go and lock it in one of the protocols like Aave, and they will give you a liquidity versus that. So you will give you interest versus that. So you are making a passive money without doing anything. So how this gonna contribute? This is now the question. That's the challenge. This is today is what? It's a 30 billion market cap, which is just born beginning of this year. So you can imagine it's exponentially growing, and people losing the trust in the current system to put their money in. Every time opening Bloomberg, CNN, CNBC, what's happening with the dollar? Oh, where is the gold? Oh, what is happening in the real estate? So all these wondering questions that keeps you awake, not the only night. You are awake the whole day and you are on your toes. You don't know what to do. I need to move my money from place to place. Oh, gold is good. Let me liquidate this bonds and go to gold. Oh, gold is going down, real estate is going up. Okay, let me sell that and go to that. That's like the yield farmers. They call them in the DeFi. It's like it's mimicking the way that is today all the investors and all the wealth makers trying to help their clients, investor or the investors themselves. They're trying to help themselves to find the right strategy to put my money in, the right portfolio. What are the percentage to reduce and mitigate that risk? All these as strategies and tactics today can be translated into the protocol with a smart contract inside the DeFi. So I believe DeFi is very strong. The only thing is that, and this is what we are working in, how to come up closer to the regulators. So we will not abuse the regulator. No, we'll keep them always in challenge. So we will come closer, how to make the compliance, which is very important issue over here, because it's all about, at the end of the day, risk. So, and trust, how to protect. Insurance today is playing a big role in that, inside the financial system, where you take a bond and you take insurance on top of it. So insurance is coming also to DeFi. But how? Today I was reading about the insurance, what are the rules that is happening. It's just protecting the bugs inside the smart contract. So if you go and get an audit to secure your smart contract, make an audit and say that's secure. So there is an insurance company that will take that as a kind of evidence to ensure your protocol, and you pay them premium. So it's a money machine everywhere inside that DeFi system. So that's basically what we are trying to do. Is we do have the custody today. We built already the trading platform. We have the tokenization for assets. So tokenizing cryptocurrencies is something like tokenizing the same real assets. It's the same way. There is nothing different. What to do after? To do this staking, lending, borrowing, whatever protocols is happening after the staking, it's open. But it's collateralized. This is good for the DeFi. So there is something that you can build on that. And always there is a kind of equilibrium trying to build on that. In certain liquidity pool, instead of single, now Balancer is making multiple currencies. So there are many strategies coming up into smart contracts that try to mitigate a lot of risk. So it's going to continue. It's a big reform until it becomes shaped well. I believe CeFi is a big challenge. It might be with the CBDC, central bank digital currency, different, because you can apply the same smart contracts in a very regulated and protected environment by the government when they have their own digital currency. It's not crypto, you don't mine it, and token, and you can collateralize it and do whatever application you would like simply via the ecosystem. But this is a challenge to what? To banks, traditional banks, lefty ones, go away. Fintechs. This is going to be very good for startups to born a lot of applications and strategies into that domain.
Yeah, I mean, a lot to unpack what you already said, but like starting from the last one, I mean, I personally believe CBDCs, the central bank digital currencies, are the exact opposite of what DeFi is. I mean, it's like central and like to, you know, when you look at the whole DeFi
It's in the middle.
philosophy,
It's in the middle. That's why I told you coming closer into the DeFi, but with compliancy. So it's a sort in the middle. It's fully decentralized. You own your wallet, you own your token, and you can contribute them into any strategy and any protocol that will be built on top of that. If I don't need to mention countries, the way that happens in some countries, that central banks will control the token, this is going to be the collapse of the system. This is going to be the collapse, complete collapse, and there will be only the current main networks that are available, especially Ethereum, that is going to grow and take over entirely the global ecosystem. If they failed, it's very critical, CBDC, if people feel that I'm controlled, now I have my cash in my pocket, I can move it anywhere I want. When it's become inside the card, also it's a stored value, I can use it. But when it comes into a token, I can disable it. You go and pay, the token doesn't work. If you touch that, touch my life, I will coup on you. And I will go to DeFi and make it stronger and stronger and stronger to take you out. So it's a very critical decision how to structure the CBDC for governments and countries.
absolutely. I mean, once people, even though it's pretty complex and challenging for ordinary people to get into DeFi, once they get into DeFi, once they, as you mentioned, have their wallets, and as Stani mentioned, the non-custodial nature of DeFi, where the user actually owns the asset and like moves the asset, rather than, you know, the asset being captured by the financial institutions. Once the end user get the taste of it, it's really difficult to go back to a model where it's with a central bank digital currencies, where the central banks have this lock and like disable feature. I mean, once you have that freedom, you see that in DeFi, I think it's still difficult to go back to a model where it's more controlled. So we'll see how that dynamic works out going forward. I think it's one of the interesting ones. But as you mentioned, Mohammed, there's this CeFi world, the traditional world, and then there's this DeFi world. And looks like, Stani, I want to get back to you. It looks like DeFi is more like right now in a sort of like, if you are in the mainland, is a traditional finance world, classical world, it's like more like an island, the DeFi island, where everything is like kind of like more self, it's like a, I mean, when CeFi is a closed space, actually DeFi is more like a closed space as well. I mean, there's like bridges between the closed and DeFi and CeFi, and it's more like, you know, the exchanges, as you will, like the centralized exchanges where you provide the on-ramp services to get into DeFi. But DeFi itself is more closed right now with little connection with the traditional finance, although Aave, I know with you getting the UK license, kind of like trying to open up another bridge or open up another line between the traditional finance and the DeFi, the decentralized finance. How do you see that dynamic will work on? I mean, clearly for DeFi to be, I mean, I'm not going to ask you if it's a revolution or not. You're in the space for a long time. I'm sure you believe in that. But how are you feeling like, looks like for DeFi to grow, it looks like it needs to tap into the traditional, like the customer base who are used to traditional finance. And as Mohammed said, there needs to be certain things in DeFi which are developing right now, but at the preliminary stage, like insurance, for example. There's Nexus Mutual, but it's, as Mohammed said, it's only giving coverage for just the technical bugs in this, contract. So it's not ready yet. It's like in the, the early stages. We're still at the early stages. How do you see going forward the DeFi in order to actually be a real revolution, to penetrate and like to grow? what are the things that DeFi world should look at? And like, I mean, we can perhaps go into the challenges as well. How do you see that market evolving going forward?
Yeah, absolutely. I think in the current state, basically, DeFi, definitely there is, it's a kind of a user group consisting a bit of enthusiasts, a bit of nerds, developers, and it's growing quite. It has grown quite a lot since over a year. But of course, like the technology and the opportunities could actually could deserve more users, even though there's issues with scalability of the network, like what we saw during this year when DeFi became slightly more popular. What happened is that the network started to clog, but this kind of technical things could be solved in a way that we have layer 2 solutions. For example, not every transaction needs to be settled by the whole with the use of the whole security of, for example, Ethereum network. There's plenty of actually options for this, and I think like once you are in the decentralized finance ecosystem, which basically means you have a Web3 wallet which is funded, and as Mohammed said, that you basically kind of have cash in your pocket, and you can actually do whatever you want. It's like being in a city, and there's a lot of services and things you could do with your funds, and kind of like everything is free in the sense that you decide what you want to do, and there's less restrictions on things. And I think that is pretty cool when newcomers come and they go over this kind of like a hurdle of onboarding, and they see how easy it is. You can just switch from one browser address to another, and you're automatically, I mean, you connect with your Web3 wallet and you can already use it. So you kind of have this.
It's like being in a candy store as a kid, right?
Yeah, exactly. And that's like the beauty of it. And I think like for us, what we have seen, there's a couple of things in terms of like getting more adoption. One is the safety security, which I come a bit later. But also there is the kind of like user experience bottleneck. I mean, user experience has gone pretty well now and to a right direction over the years. It used to be quite horrible back in the days, but now it's much more better. It's easier to build applications. People are focusing on user experience. There's more product managers, designers in the space, which is super awesome. And now the kind of issue is that how we get users that are, let's say, holding pounds or dollars or euros or whatever currency, and how they can actually go from that point to have a Web3 wallet and Web3 currency, stable coins or whatnot, and participate in this kind of like different opportunities. And that is why, even though we know the Aave protocol and decentralized finance, these protocols are autonomously running on the blockchain, we felt that we actually need to have some sort of a way to onboard more people into the ecosystem. And this is where we basically sought the license in the UK, and as a separate entity, our goal is basically to, over the time, kind of like connect fintech and decentralized finance and together and bring those opportunities closer. And that is like one thing we're doing. And the second thing with the security, this is very important because like all of these protocols, they're open, so you can review the code. That means that anyone can actually like review the code and find vulnerabilities, and which is a good thing in the sense that you are strengthening the code when more and more people are looking at it. But at the same time, if there is some kind of like a bug or some sort of attack or even like a failed liquidation, it means that there's always, in most cases, funds at stake. And that means that as DeFi is growing, the very same smart contracts might hold for example, not just hundreds of millions, but billions worth of funds. Currently, the Aave protocol smart contracts are holding 1.2 to 1.3 billion worth of value, but they might hold, for example, 10 billion to 50 billion in the future. And that basically means that the stakes are becoming more high. And how we try to, of course, solve it is the security side is that we're putting a lot of effort in terms of audits and the security itself, the practices, but also we are using the our token economics in a way that the Aave holders, they're actually voting as a governance token, they're voting on risk decisions, what kind of assets could be used as a collateral, what kind of interest rate formulas could be added, what kind of loan to value ratios. So all this kind of like risk decisions. And for doing those risk decisions and making them, they're transferring risk to themselves by taking the risk of the protocol. And this is happening actively or passively. And actively, they stake their tokens into the safety module, which means that they're putting their tokens under slash up to 30% and against receiving rewards from the ecosystem. So basically, if there is a smart contract hack, failed liquidation, or anything that causes deficit in the protocol, those funds could be slashed and compensated for the deficit. And the other way is basically the passive function, the protocol recovery module, where, for example, if those staked land will not is not sufficient to cover the deficit, then there is the minting functionality, which is kind of similar what Maker, for example, has in their system to compensate the deficit. And the idea of this kind of like having like the token holders making risk decisions, bearing the risk of the protocol, is to actually like provide more safety, and that safety should bring more adoption, whether it's institutional or retail in the future. And it's still kind of like, I believe that insurance is something that is also goes hand in hand. So the more you can transfer risk, the basically kind of like a lower cost you will have on those risk transfer elements. And I think like these are like the two key things we're trying to solve, and especially like the kind of like usability is quite key, because, for example, in Aave, if you deposit to Aave to earn interest, you get in return A tokens. So let's say you deposit DAI, you get in return A DAI, and that is basically interest-bearing token that grows in your balance all the time. So one of the reasons we did this is that so to actually get this kind of like a DAI, I mean this kind of like a savings account, you don't actually need to deposit to Aave. You just can go and buy this token from somewhere. And we have seen wallet integrations where this happens, so that instead of integrating direct deposits to Aave, they basically simply integrate ability to purchase those A tokens from with their other funds. And that is just an example how you could actually improve like usability for users and like access to this kind of services.
Interesting. I mean, I think, I mean, when we say DeFi revolution, I think when you look at it, it's like changing in like the paradigms. The whole business notions are actually changing in the sense that the user has like the full control over their assets, meaning the user has much more power. And then there's this open source notion where the protocols can be easily replicable, although there is this also the community notion, whereas, I mean, copycatting and cloning an open source GitHub project doesn't mean that you're going to be successful. So there's this that notion, and then there is this fundraising the difference. So a lot of things are changing when you look at the traditional business models. And Mohammed, as you said, I mean, users can just get into a room and like it's like you get out of the room actually and like just run away with the unregulated market. So they're like different challenges, different dynamics. And to me, the major problem, business problem, I mean, technical problems aside, which I believe the technical know-how and experience in the business with different startups actually providing composable money Legos sort of, I think that will be sorted out going forward. I think for businesses to grow, the main challenge will be in this space will be the customer stickiness. How are you going to capture the customer going forward? Whereas the customer has the wallet, can change and go from you to another provider right away. How are you going to, because this is like, in traditional businesses, this is one of the most, questions that they have. Like they spend hours and days and months about how are we going to keep our customers. Now with the DeFi space, it's becoming real challenge to keep those customers. And I know for Aave, for example, you are having the governance token, which apart from the fact that it will provide safety for it, also I think is one of the ways to actually keep your customers loyal to your service. So Mohammed, I would like to get your view on like how do you see this challenge going forward for the DeFi space or the businesses that are in DeFi of this keeping the customers in your hands or in your domain going forward?
Actually, it's not a new problem. It exists today. So churn and customer churn is always there. So a new bank open with a new credit card that has a lot of values. When I travel, I'm a traveler. I will take that card and I will go. So I believe staking is one of the stickiness. So it's catching, it's holding because you put your assets there. Building strategies around your collateral, this is going to be the opportunity to keep them. So keeping the customer and creating a value, as much as you create value, as much as you mitigate risk, they will be amused and they will stay. So it is now more stronger to churn because there are some rules they are playing in the CeFi to keep it. But in the DeFi, there are a lot. So getting the contribution of these wallets that are connecting, like what Stani said, now they are interested in the derivatives that came out of your stake. So that one become now a new alien that they would like to reach. And this is you already getting it. So others want it and you are getting it while you are staking your assets with them. So creating such values, such derivatives out from your assets and increasing the value, end of the day, everyone will look into the value. What I'm gaining out of all that. So this is my driver. So I believe if they think that way to create value, not to hit and run, make a market cap, make a liquidity, take it and go back to CeFi to invest it in something else. Growing that ecosystem, this community, creating a value for them and contributing with the others. Because people like to see not you are dominant and you are the only one. No, they like the social responsibilities. They like, so getting that ecosystem integrated slowly, it will create an ultimate goal for the self-sovereignty with a value.
Very good. I mean, I totally agree. And I think the other thing that's critical is, which I'll get back to you on that, Stani, is the innovation. Like keep continuous innovation at a rapid scale. I mean, Aave so far with the flash loans or like the fixed interest rates actually have brought some, like pioneered some of the innovations in the landscape. But this looks like a continuous race, Stani, right? I mean, you need to continue innovation to actually keep your customers, as Mohammed said, to give them value. You need that, right?
Yeah, definitely. I mean, the interesting here is that like, because it's a kind of like an open field, as Mohammed said, that like everything can be built now. It's basically a space where a lot of things will be invented and already are invented and developed. There is kind of like this constant battle of finding the best formula for every single transaction. And this is quite fascinating because we will see new products emerge, something that has been very inefficient to do in the centralized world. And also we will see basically better products in the sense that this efficiency brings us products that we have seen in traditional finance, but then again, they are in a more efficient form and brings more value to the users themselves. And the interesting part here is that since anyone can participate and build in this platform, I mean, it's completely open and permissionless. It also means that you're competing with everyone at the same time. And I could imagine if everyone could build and participate without any permission into the traditional financial ecosystem, it might look completely different today. And finance is competitive space. So I could bet that the competition in decentralized finance will just continue and we will see a lot of very good products emerge, but also like being kind of like cited by other new products. And this cycle will happen very fast. So it's interesting to see like how this will be managed in the sense, but I think it's still a bit unstructured. I definitely agree. And at some point there will be basically main products that are used and you know, different places where you have deep liquidity and deep usage. And then you see like this kind of like a money Lego innovations, small products built on top to solve certain particular things. So it's going to be quite interesting.
Okay, great. I think we're running out of time. So just as one last question, I would like to ask both Mohammed, yourself, and Stani, yourself as well. How do you see the DeFi like 1 year from now and 5 years from now? I mean, if you would like to go into more details, like, you know, for example, the TVL, total value locked. When you look at it, it was around, I think, 250 million in the beginning of the year. Now it's 11 billion. With Aave, it was 0. Now it's like 1.1 billion. So if we say that TVL is right now 11 billion, what would be your, you know, wild guess from 1 year from now? What would that be? And like 5 years from now, what would that be? I mean, Stani, would you like to have a stab at that?
Yeah, it's usually like in DeFi, you can make bets on let's say for the next day or for the next week. Things are moving super fast, but it's quite interesting. I think there will be like waves. So we saw a wave now. You know, incentives always drive, innovation always drives the space. I think with the next years, we might even see something around 100 billion in the next 2 years, and okay. It basically just requires a bit more innovation, more users, and more kind of like institutional interest. And I also would like to see kind of like permissioned systems as well, in the sense that you have a permissioned, let's say, lending pools. You still have the transparency, and you still have like many benefits of the ecosystem. But yeah, I think it will grow quite substantially, and it really depends on what kind of new stuff will be built and what excites people. But I think it's going to grow.
And Mohammed, any thoughts?
Actually, I believe it's gonna swallow the entire assets that is in the CeFi world. When all real estates and precious metals or commodities become tokenized, and these tokens are inside your wallet, and you start taking your wallet like as if you are taking your bag, shopping around, finding the right strategy. So when it comes, it will be a kind, there are two views. Either it will swallow everything and everybody will be excited about it because I don't need to have my title deed inside the court or inside the registrar to take it and go and sell my land. No, if it is tokenized, it's just a token. I send it to Stani, and Stani send me back the token, that is represent the value of that, and that's it. So lots of swaps. It's gonna be everything gonna be tokenized. When it comes to the token state, it's gonna be marginalized, it's gonna be fractionized, and then swapping. It's the entire world will be a kind of a swapping machine. This is how I see it. Everything gonna be on IoT format, so security will be resolved by that. AI will play a lot, robo-advisors. So maybe robot will create for you the formula how to reward, how to sustain, how to make an equilibrium for that. So it's exciting, but it's not one angle. You need to see the entire space, what is happening, how IoT will contribute into that, how AI will contribute into that, and the decentralization and these protocols emission. So it's another second life that is gonna see 10 years from today with smart cities and this ecosystem getting them together into the place is gonna be a totally different than the normal we are in today. They said there is a new normal. I believe this is gonna be another existence because everything is gonna change. Without going in more details, because it's deep tech is going very aggressive, and the encryption is gonna be. When they said quantum is gonna tell that it will reverse back to the Genesis blocks and that. Okay, I will use quantum actually to make more sophisticated cryptography. So it's gonna be more stronger. It's gonna be more powerful. So I believe it's going. So lots of waves, as Stani said, something will crash. There are already some protocols that mentioning the names crashed. But the good people that have a good faith and intention, they will rise up, of course. They will be the crown of that, and everybody will become them.
No, I think you're totally right. It's really exciting actually to actually witness that day by day, week by week, like with changes and everything, as you know, you said, as Stani said. I think it's an exciting journey that we will all have going forward. Well, Mohammed, Stani, thank you very much for joining our panel today, and I really appreciate your time. It was a real pleasure to talk with you. Thank you.
Thank you. My pleasure, and thank you, Stani. Nice
meeting
you.
Thank you so much. Thanks, Mohammed and Turan. It was fun.
Thank
Bye
you.
now. Thank you.
Bye.
Stay safe.
Bye.
Bye.